बोल सकते ना वेबिनार में ऐसा तो
So we are live now.
Okay. We'll wait for participants to join. One by one, people are joining. Good morning, everybody. Good morning, team. There was little confusion regarding the link, joining link. I think we are able to sort it now. I hope everybody is able to use the new link and able to join. Just we'll wait for 1 minute. I see that participants are joining one by one. Okay. I think the number is stable now. We can start. So, good morning, everybody. First of all, I wish everyone and your family a very happy and prosperous 2025 from the team, which is in front of camera, research team. There are people who are not in front of camera. From everybody from our family, we wish you a very happy and prosperous 2025. We hope that the last few years we have been able to generate a lot of wealth. We continue to make an endeavor to preserve this wealth and grow it with a safe and secure recommendations. Today, I'm joined by my two colleagues, one from our technical team, one from our derivative team. First, from technical team, we have Nagaraj. Good morning, Nagaraj.
good morning Devarsh and good morning everyone and welcome to Fortnightly Market Outlook webinar.
How are you doing, Ajit?
I'm doing good, sir. Good morning, everyone, and Happy New Year to everyone.
All right. So the flow of the presentation is like this. First, we'll see how markets have performed over the 2024. Couple of slides I'll show. Then over the next 5 to 7 minutes, my colleague Nagaraj will share perspective, technical perspective over the next fortnight, how markets are likely to behave, what is the recent price action. And then Ajit will come and share data and insights from the derivative markets. In the end, I'll again come and try to summarize what we have presented and also try to see the various international asset classes. If time be, we will also share how the various products are being behaved. That depends upon the timing. We'll try to take one or two questions at the end. So without further ado, let me start the presentation. Just give me a minute to just use this feature to enable the screen. Is the screen visible?
Yes, Devarsh, it is visible.
Is it the slide of 2024 in rear view mirror or it is the present screen?
It's a rear view mirror.
The full slide is available, right?
Yes.
Okay, thank you. So let's start. So this is the performance of various important indices over the 2024. Nasdaq and S&P 500, as you can see on the screen, has performed more than 20%. Major markets have gone up and it has been a very good year for the global Western markets. Indian markets had an average performance about 8%. So earlier in the year, Indian markets were doing quite well. But in the last quarter, there was a correction, especially in the December month, the markets came down by about 2%. And that was the case for last 3-4 months. So about 15-16% the markets went up and then corrected, gave up almost half of the gains. And at the end of the year, we ended up with about 8% kind of a gain. While Western markets, the mother market, the US markets had a fantastic returns, more than 20%. Some of this return was back-ended. It was because of the last few months of outperformance. December month was particularly bad for US markets. S&P and the Dow came down, while some of the markets which were not doing that well or were below in the performance table have catched up. So let's see what is the performance. So back to back 2 years of more than 20% gain in the US large cap stocks. Now, if I see the history from 1996, only in 1998 we see that back to back more than 20% kind of return, and it was one of the biggest bull market in the US market, 1996 to 1999.
Devarsh,
Yeah,
sorry for interrupting. There is a question that the screen is not visible. Can you please make it full screen again?
it's not visible.
Yeah, no, screen is you have to make a screen in a full mode.
It is in full mode here.
Okay, there was some query from the chat. The screen was not visible.
Are you able to see the screen?
Yeah, I can see the screen.
Complete screen.
Yeah, not complete screen, half a screen.
Those participants who are not able to see the full screen, just double click on the screen, it will be in a full mode. So we can continue.
So you
Okay,
are in the slide mode. I think that's the reason they are not able to see, but you have to just end that slideshow. Uh, on the top, so there is a end slideshow option in here. You can just click on that.
But Omkar, if I double click on the screen, I can look at the screen of full mode.
No, I'm not talking about that. I'm talking about the Devarsh are in the slideshow mode. No, that's the reason I'm.
Yeah, many are telling we are able to see. I think we should continue.
okay. Those who are not able to see the screen in the full screen mode, please look at the double click on the slides. I think it should be able to pop up for the full screen. Anyway, you can also listen to the listen to my commentary and look at the small screen. So basically, what I'm trying to convey is that there are very few instances where more than 20% return have been generated in US markets. So the next year could be a very tricky year for US markets if US economy um, is not able to see the one second. There are some requests that they are not able to see the screen. Now, is it visible?
Yes, Devarsh, it is visible. You have to make it a full screen. Yes, it's perfect now.
Again, sir, you're like in the slideshow mode. Just or turn off that and do normal presentation. I think.
So it's okay, we can carry on.
Let's carry on. Okay, so this performance of the major asset classes, commodities, I also want to share. What has happened is that the safe haven assets of gold and silver has actually um, very high 20% kind of a return which we have seen in gold and silver, which is remarkable for precious metals. So many people were actually not investing in equities, or they thought that the equities may generate negative returns, and then they decided to hide into gold and silver, and that's why they have given good returns. This is also far higher than their long-term averages, so we have to watch out for returns on precious metal. It seems that the lot of the future returns have already been generated in this precious metals. Crude oil, which was more or less flat over the year, has started performing, and if you see the December month performance, crude oil was much higher, about 5.4%. So this is what has happened in various asset classes. Now I'll hand it over to my colleague Nagaraj. Nagaraj, please share your view from technicals.
Thank you, Devarsh. Yeah, I will share my PPT right now. My presentation is visible.
Yes, go ahead.
Okay, friends, good morning and wish you a happy new year. Welcome to Fortnightly Market Outlook webinar from the technical perspective. Now, friends, without wasting any time, we will see how the markets have behaved as per intraday. We will discuss the Nifty as per smaller to larger time frame charts from daily, weekly. We'll discuss about the broader markets. We'll discuss about the benchmark Nifty with the moving average, and we'll conclude the how Nifty is going to behave in the next 1 week or the next one fortnight. So this is the intraday chart, friends. What we can observe is after a stellar up move of Thursday, market has reacted slightly on the downside compared to the previous up move on Friday and declined by around 200 odd points. So what we can observe is a slightly gradual decline in the second half. Market placed at the Nifty is placed at the intraday. This is the Harley chart, 60-minute chart, intraday support of intraday, a 10 and 20 period EMA as per 60-minute chart, and showing some kind of a consolidation moment. This is just indicating that market has reacted from the hurdle and showed some healthy correction after a sharp upside moment. So friends, this is the daily time frame chart. What we can observe on the daily that market was moving in a range bound action. And last on Thursday in this week, early this week, market has bounced back from the lower level. Initially, after range bound movement, it has made an attempt of downside breakout. After that failed downside breakout, slowly, gradually came up and on Friday exploded on the upper side. Though market corrected on Friday, the overall chart pattern remains positive. How the market has reacted, this the circled area is the gap area of previous week when the gap was formed at the higher levels. So on the downside gap was formed higher levels for the 8 to 10 session, that gap was remains unfilled. On the Thursday, that gap has been filled. After the filling the gap at the higher levels around 24,150, 24,200 level, market was not able to regain the momentum to show up further, and eventually that gap weighed high and market reacted on the Friday slightly from near the gap resistance of around 24,150, 200 odd levels. The clear upside breakout is visible of the range bound action, and the Nifty is well above the 10 and 20 period EMA on the daily chart, which is indicating the healthy correction is going to be a buying opportunity. We are not expecting any bigger decline from here onwards, with the chart indicates. After the resistance from the gap, we could see bouncing back again from the lower levels. There is a support of lower level around 23,700. The long bear candle of Thursday. Normally, technically, we believe, friends, the long bull candle of Friday, in fact, the long candles always act as an important reversal point on its upper side, middle side, and the lower side. Currently, Nifty is placed at the middle of the Thursday's long bull candle. I am expecting this bull candle is likely to act as a catalyst at the lower level. If the market anyhow comes down to 23,700 or during this consolidation or dips, there is a possibility of higher Nifty bouncing back from the lower levels. And I'm not expecting, as mentioned, the bigger decline is going to be a buy and dips opportunity. We could see Nifty again racing towards the hurdle of around the 24,150, 200 level, which is the gap area as mentioned, circled in the chart. And that gap area again Nifty could consolidate. The present Nifty trends up, and this is a trend line area that is going to be a trend decider. Once Nifty breaks about 24,150, 200 level on the daily chart, we could see Nifty racing towards 24,400, 500 levels in the near term.
Nagaraj, we'll have to wrap it up
Okay.
fast. Yeah.
Okay. Yeah, sure. So friends, this is a Nifty daily time frame. As I mentioned, the 200-day EMA has acted as a very significant point in the past. Whenever this 200-day EMA has supported 200-day EMA has supported the market, market has witnessed a significant upside bounces. These are the indication over the last 2 years that market, whenever regained the support of 200 EMA, market has witnessed a significant upside momentum, especially for the Nifty in the past. So this is the weekly time frame chart, friends. The weekly after a sharp decline, the market has consolidated in the last couple of weeks. Last week, we have seen Nifty showing upside recovery from near the important support of upsloping trend line. And friends, this is the monthly time frame chart. Monthly time frame still not over, but after a downward correction of the last 3 weeks, we have seen Nifty bouncing back as per monthly time frame from the lower level, from near the support of 10-month EMA. This is Bank Nifty. Bank Nifty is consolidating at the higher levels. 54,000 is acting as a strong resistance. At the same time, 50,900, 51,000 is acting as a support, and market Bank Nifty is likely to bounce back from the lower levels. And this is mid cap 100. After the formation of negative reversal pattern, mid cap has bounced back from the lower levels, placed at the cluster support of weekly 10 and 20 period EMA. I'm expecting the overall chart pattern is looking positive, and we could see upside bounces in the mid cap segments towards the recent swing highs. The similar action has formed in the small cap as well. After the bearish pattern, small cap has bounced back and placed at the support of 10 and 20 week EMA, and we could see further upside momentum in the small cap as well. So the conclusion is the sharp upside momentum of Thursday indicates the change in sentiment for the market. Though Nifty declined on the Friday, we are well placed above the crucial supports of around 23,800, 23,750, which are going to be the support in market in case market declines. And the previous opening downside gap, as I mentioned, of 19th December weighing high for the market so far. And we could see Nifty, I'm expecting Nifty to bounce back from the lower levels and retest again the 24,150, 200 levels. Once it breaks about 24,150, 200 levels, we are likely to see Nifty moving towards the 24,400, 500 odd levels. Bank Nifty placed at the support around 50,000 mark, and the broader market indices are regaining upside momentum after the formation of negative pattern of the previous week. So sectorally, banking, automobile, oil and gas, FMCG, CPSC, metal, realty, infra are likely to outperform in the near term. So we have finished this on technical part. I would like to hand over this session to my colleague Ajit Nayak for the derivative perspective. Over to Ajit.
Yes, Nagaraj, thank you. Is my screen visible?
1 minute. Yes, it is visible.
So we'll quickly look into the open interest data. So I'll share the market perspective from the open interest data. First, let's look into the data, what it has happened during the week. So during the week, we can see that Nifty open interest has gone up by 9.5% and Nifty going up by 0.8%. So there was a long buildup in the Nifty. But on the contrary, Bank Nifty was underperforming, and we have seen a short buildup in the Bank Nifty, where we have seen 20% raise in the open interest and Bank Nifty falling by 0.63. So this is a little concern when it comes to Bank Nifty, but Nifty is performing nicely. And if we look at the open interest data from the call and put side, this is very important for us. So this data plays very important. If we look at the data, we can see that 23,700, there is a huge put writing which has happened, and the higher side 24,100 and 24,200, there is a call open interest data. So whatever strategy we are going to formulate this week will be majorly based on the data which we can see from a derivative perspective. So the data clearly indicates that going forward, 23,700 could be a good demand zone, and whereas 24,100 and 200 would be a good resistance zone. So any where if market is going to give a breakout in either direction, we can see a huge movement in the market, especially when it comes to upside. 24,100 and 200 is a crucial resistance above which we can see that market can even test to 24,400 and 500 level. Since technical indicators and other parameters are showing that market is heading northwards, so we are more inclined that market could break that 24,200 level. So we are a little bullish this side. And also the data of FIS is also suggesting that they are heavily oversold now. If you look at the FIS long percentage, it is only 17% long. So they are heavily oversold. In the past, if you look at this data, so this chart is very important because if you look at the historical numbers of this chart, whenever the FIS long percentage is nearly about 17 area, I have marked here in the orange color. So market, we have seen a good rally in the market. So that is why it is more important to look the FIS data. Even if you look at the put call ratio, it is started to moving upwards. So this combining put call ratio and FIS data, we can say that there is chances that market could bounce in the near term. So if we combine our data, so what conclusion we can come for the Nifty is like long buildup is seen in the Nifty during the week. Put writing is happened at 23,700 and 23,600 level. So any breakout about 24,100 level, we can assume that market can test 24,400 and 500 level. And from the outlook for Bank Nifty, we have to remain cautious in Bank Nifty because the data does not suggest as bullish as it is in case of Nifty. So we'll be little cautious. We'll wait it for to cross 51,500. Once it cross 51,500, then whatever short is built up, so it is likely to get covered. So when that happens, we can see a good movement in Bank Nifty above 51,500 level. At that time, it can test even 2,000 to 52,500 level. On the lower side, 50,500 to 50,300 is going to be act as a strong support. And from a sector wise, auto, finance, IT, and oil and gas, we can see there is a good amount of long buildup has happened in this space. So we can keep these sectors in focus for the coming week. Thank you. Over to you, Devarsh.
Okay. Is screen visible and am I audible visible?
Yes, Devarsh, you are audible.
Screen is also there, right?
Yes.
Okay. So again, as my colleagues pointed out, Indian markets have rebounded from the last fortnight. We had a deep correction, and then from that correction, we are rebounding compared to the global markets, where US and other markets have about 4% still are down from the last month, and they are about more or less flat. Indian markets have started outperforming compared to the past. When we look at the important calendar events, we see that nothing major from the economic side is scheduled over the next fortnight. Most important thing is now on the monetary policy of BOJ, which will be in January 24, and January 29, we will have a FOMC monetary policy meeting. But the important events not will be from the economic side, it will be from the corporate side. From January 6th, so we are starting the new quarterly earnings season. Quarterly earnings season is very important this time because we had a slight bump in the GDP growth. Corporate results were also not that great. In order for the market to sustain and move higher, it is important that the earnings starts improving, and that's why this earnings season assumes a lot of importance. If some company doesn't perform for the second quarter in a row, we are likely to see a derating. While some companies who continue to outperform, continue to give numbers, there will be sharp up move on those stocks. So keep an eye on these numbers, especially the IT numbers will start from January, Tata Elxsi and TCS. These are the important numbers. And again, over the next fortnight, a lot of important quarterly results will come. So that's where the focus should be. About the sectors, as my colleagues pointed out, auto, oil and gas, FMCG has been outperforming for the last fortnight. The consumer durable and healthcare did quite well over the last 1 month, while metals have been the perennial underperformer. If you see the last 1 month and the last fortnight, the stocks have been underperforming. Unless China starts outperforming, we will have a problem in these sectors. The outlook for to summarize, the outlook for the next fortnight is that on the banking side, there is some kind of overhead resistance. If we are able to cross that resistance, then banking will start performing. Overall, we are very sanguine on the prospects of the overall market. US markets are trading at a higher level, higher valuation. So this year, 2025, we need to see how much those markets outperform. If they continue to outperform, then obviously India will also should do well. We are expecting flows to start into Indian markets. And if that happens, especially from the January 31st, we are expecting that the Indian treasuries will be added to another global indices of Bloomberg. The Trump administration is going to assume office from January 21st, and we will have one more webinar around January 16 to share more insights about what are the possible policy outcomes and what kindly impact of US policy will happen on the Indian market. So we'll cover that, and then from February 1st we will have the eyes on the budget. So 1 month of exciting trading opportunities is ahead of us, and we'll try to bring them with you over the next fortnight also. So to summarize, we are more bullish, more encouraging signs are there in the Nifty. Bank Nifty side, we are a little worried. If we are able to break immediate resistances, banks will participate. Overall positioning of the FIs are quite conservative. We think there is room for short covering there. And if FI starts covering their shorts, markets has a more leg to go. Once we cross the immediate resistances around recent levels, which Nagaraj pointed out, then short covering will take over, especially on the banking side. That's we wanted to cover. Now, if you have any questions, we have gone past our allocated time, but if you have any questions, we'll take one or two questions now. So Rajkumar Selva is asking, is it possible that the Nifty came back to the level to just fill the gap and again it can go down to 23,000 levels? Yes, it is very much possible. But for that, we'll have to break the immediate supports, which Nagaraj pointed out. And also it has to be coupled with some negative news from the corporate side. So companies like Infosys, TCS, or large banks, which are going to announce results, quarterly results, if they are not up to the mark, then only we will think that the immediate supports will be broken. Otherwise, the positioning of the market is that we are headed higher. Budget, obviously, budget is a very important event, which we will cover in our next fortnightly market outlook webinar around 16th of January. At that time, we will cover whether what kind of budget proposals are expected. Now, Finance Minister is talking to various stakeholders, and then proposals will come. So we'll try to cover those things in the next fortnight. All right, we have we have actually used more than time which we were allocated to us. Thank you everyone for joining, and I hope this has been useful to you. Thank you, and we can close the call.
Thank you.
Thank you.